Hi everybody, this is Kel once again. Today is the 12th of December, Monday, 12/22/22. What a day. Alright, time for today. I'm going to share with you that gold is going to go above the 2,000 mark. Now, there's some reason for that. Other than we talk about the dollar is actually coming down right now, there's a big reason, and apparently this reason is not found on the mainstream media. This is getting interesting. So I'll tell you more in detail. Let's go into the works. Right, once again today, make sure that you do a risk assessment, make sure you do your risk calculation. This is going to be very, very important. And of course, thank you AIMS for the kind sponsorship. Now, the thing is this, we all know that Biden, right, recently started to really drop the crude oil into the market, probably for the election. So the crude oil reserve was about 750,000 barrels, okay, almost there. And now it has dropped all the way below the half a million barrel. Right now, this is the lowest ever since 1985. So all along since year 2000 and above, you can see that the reserve have been staying above the 500,000 barrel. Now it has went below it. So thing is not doing that good, right? So we have to really watch and see why it's happening right now. So the thing is, if they say they have released so much crude oil in the market, they need to replace it. And what would they do? Who can sell it to them? Interesting. There's some report going on that there is a chance that per barrel of oil will be sold for 1 gram of gold. Wow, that is very interesting. And you don't really see them in the mainstream media. I went through all the mainstream media. I do not see anything reporting of this. So it's like, where you get it from, right? So apparently there's this guy called Zoltan Pozar, right? This guy is an investment strategist at Credit Suisse, okay? And he's based in New York. Apparently he has been pretty spot on with some of his calls. And you can see that he's an expert in global macroeconomic affairs, central banking, and financial intermediation. So the thing is this, okay? He is actually saying that if Russia accepts gold for oil, gold price doubles to 3,600. Wow, okay. So apparently, he said that it's not improbable for gold to double to 3,600 if Russia responds to the G7 oil price cap by accepting gold for crude. Wow, this is something that is going to be big. Now, again, I repeat, this is not found in mainstream media, and some of you guys may find it very you can't believe in this, but of course the very word came from Credit Suisse guy. So you can see that this article now is going viral, and they are saying that if, let's say, if they're going to give 2 barrels for 1 per gram of gold, wow, who knows, gold may go to 1,120. Gosh, $120 per gram, right? So that's going to be incredible, okay? So that is whereby people are now speculating that gold can go up to $3,600. Now, if you actually do a Google on this, you can actually see that the article, but it's not from the mainstream media. And when I click on the first one, right, for some reason I get this 405 error. Okay, why? They don't allow this to be told to the market. Very interesting. So the point is this, I still think that gold is a buy. I don't know about 3,600, but I think that 2,000 is very possible because I believe that Federal Reserve will pivot soon, maybe next year. And when they do that, the US dollar will come off and that will bring gold price higher. And my forecast is $2,000, and then the maximum I'm looking at is 2,218. That's my level I've been calling for since last year. But if you tell me anything above that is alright. I think that will be very, very interesting. Okay. Alright, now you can see that Russia has a lot of gold since 2014 until now. Russia have been buying gold relentlessly until pandemic time, and then after that during the last sanction, because they invaded into this Ukraine, so that's why the buying stopped. Because the sanction, right? They cannot buy from other countries. But the gold that they have right now is amazing. From 2014, they literally doubled their reserve. So of course, that is going to make Putin a very happy man if really gold go up. And of course, they get to sell their oil at a cheaper price to the America. So it's going to be a very interesting thing if this really happens. Now, as we are looking at all this, right, I realized that over the weekend, more and more people are getting a bit worried, like Cathie Wood. Cathie Wood says that the Federal Reserve is making a serious mistake as bond market flashes worst signals since 1980s. Now, this is an article on, I think this is from CNBC. And this is really something there. And I've been saying this, that the Federal Reserve is really in a bad light right now. And billionaire investor Ray Dalio says that stocks still unpricing in the Federal pushing rate near a very harmful, very damaging level. So once again, we all know that if the Federal Reserve increase interest rate, usually the stock price will relate and it will be affected. But for some reason, some counters are still very resilient and the earnings are not there. So that is something to be very careful. So let's take a look at this chart since 1970. This is the S&P 500 GAAP earnings and a forward estimate. Now take a look, guys. You can see over here, let me bring my pen in. You can see that every time, this is the moving, the one is the X-Pond, it's the GAAP earnings, okay? So what you can see is that every time when the market goes way above certain level, it will have the tendency to pull back to the X-Pond, exponential, okay, over here. So the last time we saw was back in 2009 where the market went beyond, right? The GAAP earnings went up, then after that it pulls back down here. Can you see? So it's the same thing again back in 2016 with the Brexit, and it comes off. And we have when the market was going crazy, then the COVID hits us, and then the thing come back down. So the question is, now we are still so far away in terms of our GAAP earnings, but the exponential here itself, right, is this point. So we are talking about the market. What if the market really pulls back to this point here itself? Then that means the S&P 500 will need to drop to at least 3,400 to 3,200. It's crazy because if you come back to this point here, S&P 500, okay, must really hit about 3,400 to about 3,200 level. Wow, this is incredible. So guys, take a look at this and see whether you believe it or not, because I don't think this time will be different. I think it will be the same. And of course, if that happens, things can get very scary. So of course, this is the most anticipated recession ever. This is the forecast with the professionals, and you can see that since 1968 until now, every time when this thing goes past to 25 or 30, recession is always nearby. But where we are right now, we are more than 40, all right, more than 40, even higher than the last time at 1980. So I suspect that there is a very high chance that the market will pull back and recession will be on the cut. And of course, buying gold seems to be a right thing after the initial sell down, right? After the initial sell down. All right, so you can see over here, this is the from the, oops, sorry. Oh dear, right here, what did I do? Okay, moment, please. Oh, apology for the technical error. So what I'm saying that right with this happening, there is a chance that S&P coming down all the way, and that is going to continue. Well, there's something that we must take note is that this is the from Goldman Sachs, that if there's going to be a scenario of a soft landing for 2023, they expect the S&P growth to go down from 231 to 224. And of course, there'll be no growth in fact. And of course, that will bring the market back down to a low of 3,500. And then the highest level could be about 4,000. But if the market go for a recession trough, that means that the earnings will go down all the way to a 200 and there'll be a deficit of 10-11%. And that will bring the market down all the way to the 3150 level, which is something near to what I said, between 3,400 to 3,200 level. But of course, that is based on if the earnings go really bad, okay? So if you ask me, I still think that, I'm going to put my stand here, I believe December and January, the market will still be pulling back down. And maybe by February or March, we may see a little bit of recovery. And by then itself, we see what do we see from the market. But still, downside pressure is kind of expected right now. Yep. Okay. Wait a moment. There's some error here. Once again, apology on this. There's some technical side issue. Okay, let's continue. And let me clear my screen here. And of course, this is the technical using conventional indicators. This is the S&P 500 right now. And we are near, in terms of stochastics, we are near MACD. We are pretty near the top level, which happened before. You can see right here. And also right here. And using the VIX, right, the VIX now is at the lower end at 20, and the last time you see 20, that's where the market hit a peak. You see 20 again, that's where the market hit a peak, and so forth. And of course, the RSI back then, it was near the high of our 65. Here was more than 70. So where we are now is somewhere in 65 area. So with the technical also calling for sell, it seems that the S&P 500 to drop down to 3400 level is going to be pretty possible. Yeah, I still believe that 3400 is the first target to go, and 3200 is the level that I think you can do a bit of buying and then wait for it for the whole moment, the market to recover once again. So remember guys, this is my view here. 3400, that will be the first target. The main target is 3,200. That'll be a very good base to buy. And of course, Goldman Sachs says that if it will be hard landing, we may see as much as 3150. Okay, all right. So that is what we have for you for the fundamental side for today. All right, let's just move on. Okay, do note that we have a data coming out with CPI data that's with tomorrow, and the market is expecting the same thing. But I just feel that the data will be slightly higher than what the market is actually expecting. All right. Okay, with that, right, this will be the, let's go to the charts right now and see what do we have for you today. Let's look at the chart right now, and I'm going to bring it in. Now, yes, the Dow Jones now, we are pretty near to the 90% mark, which I mentioned, 33,258. The market has went below the 92.5%, which is at 34,181. So based on my view, I think that there will be a chance to see this number 33,258 by either today or tomorrow. Now, China market today has pulled back and is now hovering at the MA200. Now, this is a new benchmark here. The last time we saw this, the market went to the MA200. So now if the market pulls back, then you come back down to this area here for the China market. But of course, if the market continue to find strength, then we can see going up all the way to 13,404 level. Okay, let's just go into the market for today, the Dow Jones. Now the Dow Jones has traded below the BNB support level, that is about 33,583 level, and this is not a good sign. If the market stays below OP and breaks below 33,345, the market can go all the way down to 32,572. Interesting. So that's the reason why I felt that the market needs to really ding dong a little bit, but once the selling is there, they should be able to bring it down all the way to 32,572. And of course, if you look at the S&P 500, the S&P 500 now is trading below the BNB support level, and that is somewhere around 39.54, and now it's trading below by 20 points. If the market continues to slide, then 39.54 will be next. Now you can see that the market now is below MLP, below MA30. All right, but it just now is touching MA200. So by looking at this, that means the market seemingly is still more towards the downside than upside. Yeah, so traders need to pay attention to detail. And of course, this is the Nasdaq. Nasdaq has tried to firm itself way above the BNB SL. You can see that whenever you try, you always hit the BNB SL and rebound and rebound. So for today, right, it missed it by the low for a while. But the thing is this, it has to. I heard that they're going to push up to the market. So 11,600 MLP level, I think that will be easily taken up. 1162 is the MA 30. Then I think that maybe around this area we could see some profit taking, or at least they will just stop for a while. But of course, if the market breaks below the BNB support level, then this time can be bad. It can be down all the way to 11,276. Okay, so traders need to watch out for all this. And of course, what we have right now will be the crude oil market. Apology on that. Crude oil, there we go. Now crude oil has came off. I told you, right, once crude oil break below 76.80 cents, the BNB support level, it will go down to here, $71, and brilliantly it touches. Now today is a DJDD, so who knows, the market may find strength again and push it up. Suppose it's above opening price, you should be buying, below opening you should be selling. So watch out for this. KSI and KRW both are all fidgeting on the red side, so basically the downside pressure is still there. Now, of course, some people are saying that maybe they really have to fulfill what they say to bring crude oil down to $60. I kind of think that it won't happen. Maybe to $68, $65, but I cannot see why it's going to $60 unless it's political reason. Yeah. Okay, so we have done on crude oil. Let's look at the gold market, shall we? Now, gold market now is trading slightly lower. The gold has opened at 1796, and now it came off, right? And I mentioned to you several times, right? If you want to travel outside, the market is now on the upside, right? Be careful, wait for the pullback. Now the support level based on the BNB, it should be somewhere around here at about 1766 level. But if the market can't hold 176, then I think that 1715 will be a 1721, sorry, will be a better level. To me, is that if gold can go above this point 1810 convincingly, then maybe we can see 1854. But as long as the gold stays around this area, then I would say that you just have to go slow right now. And of course, we have your silver price. Silver price is now slightly at 23.28. The high went up to about 20. The high was 22. So the high was $23.67. Missed the 24 marker. But then again, this is a BNB support level, very strong support. So you can buy, as long as above OP, and you can sell because as long as it's below OP. Okay. But I think that if you have a follow through to push you up for buying and selling, that will be better. Alright, so silver, a pullback to $22 will be good. If not itself, right, we will prefer to see whether we can have time with on the upside towards 24.88.6. Alright, so we have the gold and silver. Let's look at the Bitcoin and Ethereum to wrap it up. Okay, so for Bitcoin, as you can see now, it has pulled back down and hits my first target, and now it's just basically like marching under the same spot. It's marching up and down, right? So I suspect that the KSI is red right now, and the KSCI is no bars. So that means a pretty mixed signal. So if the BMT do break 16832, we can see 16445 coming in. Okay, and of course, if things get drastic, we may even see 16192 here. Well, that'll be pretty cool, right? So for me, I still believe that Bitcoin will come down. I still believe that Bitcoin will come back to somewhere around here. So traders, you need to just take note of that. Yep. And let's look at the last one. Is Ethereum. Ethereum is also sideways in the BNB. Now the BNB is at 1217 as a support and 12141 as a resistance. Now, of course, same thing again. There are people asking me whether can they buy Ethereum. I'll say that not the best time because both my indicators now are not very kind for buying. Let it come back down when we went to 1571. That would be a better buy because there's a stack over there under KCV. Alright, so all this information, I hope that you can utilize it and make good money. And for us as well, right, we suspect that there will be big movement for some of the market very soon. So watch out for that. This is Kel signing off. Have a great day. Bye-bye.